Alright everybody, welcome. It is August 14th, sunny night, and this is my very first video for Just Hit Trading. This is Jimmy. I'm going to start charting and go through developing a weekly watch list. So I know there's a bunch of other YouTubers and a lot of people out there with weekly watch lists, but I've never seen anyone really kind of don't go in true depth into how they develop this watch list and find the setups that are used throughout the week. I mainly do daily day trades and swing trades. Swing trades, I have had a monster 2 months lately, and I want to keep continuing that trend. So um, right now, I usually start on Sunday nights on the futures, so ES and NQ that open up at around 6. So um, I use a couple different tactics. I use Fibonacci levels, I use supply demand, and just looking at overall levels. And what you see here is pretty cluttered, but I mean this is on a daily time frame, and um, I don't I don't chart by posting and charting levels at every single level. I want to look at key levels of supply and demand. So it might be cluttered, but I develop these levels and because I want to see the significance of levels, right? So supply and demand zones that are very important um, in my eyes. That's areas of interest where we want to go long or short. Right now, just looking at ES, we're coming up into a supply zone. But first things first is, before looking at these charts, and because I'm so used to looking at my own charts, I know what the key levels are. I want to provide a pretty clear picture for you guys. So we want to see what's going on with the daily EMAs. So if I go and I want to go to, let's go and create a new drawing set just so it's nice and clear. All right, we're looking at ES first, and what I have plotted here in terms of EMAs, we have the daily 200 weighted moving average, which is this teal here. I have the daily 9, 21, and the daily 50 and 55. All right, so first things first is when we look at some of these EMAs, I want to see what the large trend is. The large trend and the way we respect the daily levels are that the daily 200 weighted moving average is something that we look to be long on when we're on top because that's a long-term uptrend, right? And if we're below it, it's a long-term downtrend. And so you can also see that a golden cross is formed when we have the uh, short-term moving average crossing over the long-term moving average. So what we have right here is our daily 9 EMA crossing over the 200, right? So that's a golden cross. And so in my eyes, we're actually a little bit extended. We kind of went past the 200 weighted moving average and never even really came back to retest it, let alone the daily 9. We're a little bit far above it. So, in short term, I would think that we might pull back, and you can even see that the futures candle here, it opened up red. We are down 28 basis points, right? So it's not much, but there is quite a bit far room down all the way to 4200 level on ES, and that may or may not be a little bit too far, but for all we know, it could just keep on going up, right? So what we're going to do is identify some of these points as to how, like, what we want to see as a bounce level, what we want to see as a reversal. So we're going to do that here now, right? So I want to point out that we had a little while ago, right around the CPI numbers last month when they came out, we had that bit of a bull flag, right? When a lot of people were expecting a breakout from the past CPI numbers, they actually came out poorly. So when they did come out, we had 3 pretty red days going to the consolidation period. But what I do want to point out is that this consolidation period, right, it created a lot of supply. And when we got into this area of supply initially, we actually went back into the supply area and consolidated here for that breakup. To be honest, I was actually a little bit on the bearish side coming up into this area because this accumulation in the supply area before CPI came out for that drop, that's that's pretty heavy, especially with three big daily candles like this. I would think that you would typically see entering the supply zone, you would see more bearishness, but we didn't. So, you can't have a bias when you're going into trades, but you can really just, it's all about price action and going with the subs that you find, right? So let's go back. We are looking at this daily 200, and let me just, so that's the general thesis of what the clearer picture of ES is looking like. So now I want to go back in time and identify some of the supply and demand zones that I already have. Right, so if I go back to my key levels here, right, when I zoom in, right, you can see that it's not as still kind of cluttered on ES because I use that as a a market indicator going through the day, but it won't be too bad once you zoom in back when you're on the 5-minute chart, right? So I do want to delete some things here. For example, I have this daily, not daily, but the 4-hour supply zone up here, which got invalidated because we have this green daily candle that invalidated it, right? So I'm going to get rid of this one. I'm going to get rid of these uh, supply supply imbalances that I had marked. So 4-hour, 2-hour, this was an old all-time high. I actually can get rid of this because I did check it the other day and it's not that respected as much, right? So we are in this an area of a pretty big supply. So this was the daily supply that I had marked from a while ago. So let's go kind of trace back. So this daily supply and supply, the way I mark it right here, we have a clear supply zone, which is a base drop. So this green basin candle, although it's quite a bit long wick, but the move before and after the basin candle was quite aggressive. So I thought that this was a pretty valid supply zone. And even if I were to go down to smaller time frames, I'm sure I would see some sort of new supply get created right here with this large green and red daily candles. So if I look here, it's entered into supply zone 1, 2, 3 times. So when you go into these supply zones, right, what I expect is the more times it gets tested and the deeper it goes in supply or demand zones, the weaker it gets, right? Because supply zones are accumulation and you get some liquidity for bigger moves. And there's a lot of limit orders in supply zones as well as demand zones. So each time we go in, these limit orders will get filled. And so when you exhaust all the limit orders, that's when you see an invalidation, right? So that's how I had this supply zone marked. So now I know where that was. Now if I go back to where we are today, right, we are going to take a look at some of these smaller time frames and see where we are. But before I do that, I just want to get rid of this Fibonacci retracement levels because we actually exceeded that. We could keep it because there are Fibonacci levels on past 100%, and these are things that I can probably make another video in the future to explain how I use Fibonacci and how I build supply demand zones and whatnot. But for this very first video, I just kind of want to create this watch list and just really to document my watch list creation as well as for the group in Just Hit Trading in my Discord. All right, so on the daily, I don't really see any new supply or demand formed since I last created it. So let me go down to the 4-hour. Right, 4-hour, I don't really see anything here either. We don't really have a good basin candle with an aggressive drop or rally. So 3-hour. We do have a little bit of a basin candle here, but you can see that there's not much of a rally candle right after it. And then we see some of a longer wick that would invalidate this basin candle anyway. All right, 2-hour. Same thing. We could have had a supply zone created here, but we went past the invalidate any kind of potential supply. 90-minute. Same thing here. 1 hour. All right, we have a bit of a basing candle, but to be honest, I don't really trust this basing candle because of that long wick. 45 minutes. I really don't see anything here. 30 minutes. Not much here either. I see this one little red basing candle, but again, that move up isn't that aggressive right away after the basing candle. I usually, to be honest, I really don't go down this far to 30 minutes when I'm looking for supply demand zones, right? This is, to me, is a little bit more noise, but because I didn't really see anything, that's why I'm just kind of checking. Same thing with the 15 minute. 15 minute, you can see that there's no clear basing candle or structure for basing, right? You can kind of say that this area um, right here, right, it's a little bit of a demand because it kind of consolidated a bit before moving uh, uh, up further, but I'm not really going to mark that. It's not really that big of an interest level for me. So I'm going to stay with my current supply demand zones where I have it at 4260 as well as where we entered supply. And then I have it at 4202.25 as this 45-minute demand zone. So just to look further up a bit, we don't have too much resistance up, not until about 4,300, right? So let me just double check the weekly real quick, just to kind of see where the EMAs are as well. And you can see here we don't have any green basing candle on the way down, and same thing up here. We don't really have any basing candles as well, but yeah, there's not too much supply up until 4,300. So that's the thing, right? If I go back to the daily and look at the clear picture again, what we see here is, we have this area, that area of supply that caused a big drop, right? That we actually tested and rejected. If I go, uh, if I go and look at, sorry for jumping all around, but if I go back to my normal chart and I look at the 5 minute, I just wanted to show you guys what happened on Thursday of this week, right? We got into this supply zone that I was mentioning, right? And as soon as we touched it, even though I said that new supply probably formed because we entered it so many times, it got up to that level, that 4260, and instantly rejected it. We sold off all the way down to 45-minute demand, right? And you can see here, look at how cleanly it touches. Touches it at 4202.75, right? And that's where I use a lot of supply and demand to kind of gauge strength, right? When we enter in demand, that doesn't exactly mean that I want to long it right away. I do want to see how buyers and sellers react, and then I can take my position long or short, as well as looking at other key factors. I look at squeezes and whatnot as well as the key levels that I'm looking for. So because this held, right, we had a bullish case on Friday because we had an uptrend, which is a higher high and higher low. So you can see that a higher low was made here, um, and then we actually went all the way back up to that supply zone that we've been looking at, the key supply zone, and we actually broke it. Right, so now let me go back to the daily and go back to the clear picture. So if I'm looking for a pullback, and if we do sell off overnight into tomorrow morning, I would want to see how buyers react at this key level and at the 200 weighted moving average and the daily 9. These key levels are very important to me because I'm looking to see if it actually is indeed just a pullback, right? We want to hold this long-term uptrend, and to be honest, I think we can go up much further, but I really do think we need to validate the daily 9 EMA and the daily 200 weighted moving average before we see much further move to the upside, right? So that's for most part ES. Really, it's really a little bit of indecision. We probably won't know until the morning or when market opens as to what the overall direction is of the market. And I always want to make sure I understand where SPY and the Qs are going by looking at the ES futures and NQ futures because I typically the market all moves in one direction, whether or not there's a sector rotation. But I trade um, heavily uh, liquidate. I guess liquidated is not the right word. Liquid stocks, right? So a lot of tech, for example, even right now, Amazon, after the split, the spread on options are very, very tight. So I'm looking at spreads that are within at least $5 each, right? I mean, there are some spreads on some stocks that I do trade every now and then, like say Home Depot, Walmart. Those spreads are a little bit bigger. Sometimes they can get up to like 20, um, and so that's a little bit more wide than my liking. So the more liquid a stock is, especially in the option chain, that means the tighter the spreads are. So now that we are done with ES, let me move on to take a quick look at NQ. And usually, to be honest, I don't chart NQ as much because ES is my um, primary ticker that I look at in terms of overall market direction. Like NQ, I'll look at every now and then, but for most part, they move hand in hand. Sometimes one lags more than the other because the S&P, has a very high concentration of tech stocks, right? So a lot of the big tech names, Apple, Microsoft, they are heavily weighted in the S&P. But because S&P has cyclical stocks, other stocks in energy, sometimes they go in the opposite direction of what the Qs go. So that's why I really like looking at ES as the main one, but NQ I'll look at sometimes as well. I do want to point out that we are breaking out of this downtrend, right? Ever since pretty much all-time highs. I know ES just barely broke out, but right here we can see NQ broke out of this upper trend line where we were constantly making a lower high, right? So let's see if we can continue this bull run and see if we can get up to the next lower high. And that next lower high that we had on NQ was right about 15,280, right? So we can get up there. It's going to take a while. It's not going to happen overnight, but that would be the next goal if we can hold this breakout level. And same thing here. We have the daily 9 EMA and the weighted daily 200 crossing over with that going across as well. And I see this, what looks like a basin candle. The only thing I don't like about this basin candle is that this wick goes all the way up to the second rally candle, right? So our base rally, this wick is pretty high with signs of a lot of sellers here that I'm not really sure, or at least I don't trust this as that um, good of a basin candle or demand zone. All right, so let's go through some tickers and some equities to see what we want to put on our watch list this week. And these are some of the tickers that I've had on this week's watch list. Or actually, it's not. This is back from June. If I go to my August one, right, we'll just briefly look over some of these tickers and see if there are any setups that I like that I want to take for swings or day trades. All right, first one is Apple, and you can see this, this really runs with the Qs. And I did want to point out that almost all the um, the tickers that I'm looking at, especially in the for both ES and NQ, the daily RSI is very overbought, right? We're past the 70 level. We're right now at 74.2, so I would not be surprised if there was a pullback, right? So let's just take a quick look. This is an old fib level. I'm gonna get rid of this one because we had a new downtrend. So if I take my Fibonacci retracement from top to the bottom of that most recent one, we actually went past the golden pocket. That's something I can talk about in the future, but we're at very extended levels. If Apple pulls back, so will the Qs, because that's a very high proponent of the NASDAQ Composite Index. All right, so this is not a setup that I see huge potential because I want to look at the risk reward. Even if we say we want to pull back to daily 9, that's more of a scalp in grand scheme of things. I want to look for setups that have uh, much higher risk reward potential, right? At least even 2x risk reward is low to me. All right, so I'm going to get rid of Apple. Next, AMD. AMD is actually not bad. And the reason why I say that is we are right at a key level. The key level being the daily 200 weighted moving average. We closed above it on Friday, right? So it's starting to create some sort of a bull flag right here, and we validated the daily 9 EMA a few times. So we might potentially see a push to the upside. Um, but this push to the upside, if we hold this daily 200, right, we can see that we also rejected this 78.6% Fibonacci level. And the way Fibonacci works, right, if we break and hold this Fibonacci level, I would see a next target of 109.57, which is the top of the peak of the most recent what is this? It's a lower high, right? So if we can hold the 200 and hold 101.44, I would see a new target of 109.57, right? So it's a little bit overbought, um, but we are at a key level here. That's just going to be something that I'll just keep watching. So let me zoom in, right? It did reject it. So let me mark this up. I'm going to take a snapshot real quick. And I'm going to post it to my Discord. I'm only sharing my TOS screen, but if you guys are interested in joining the Discord, which is completely free, just leave a comment. I will probably post a link to Discord in the description below. But for now, just like, comment, subscribe. All right. I'm going to label this today is the 14th of August, so 8:15 watch list. We're going to look at AMD and my little description here. You know what? I'll even write this here for you guys to see. AMD closed above the daily 200 weighted moving average, but rejected the 0.786 fib level. Calls if 101.44 breaks and hold, targeting 109.57. Right? So that's all this is. And then I'll post a screenshot. Right? In fact, let me just draw this trend line too. So, when we go back down to a smaller time frame, we can see how well this respected that Fibonacci level, right? I know it got just a little bit off, but it's very close. And I am still bullish on this because if we look at at this pattern, right? All this consolidation, this whole squeeze is very healthy. This squeeze and consolidation is accumulation so that we can make that next move higher. I mean, we can still break down, but this is one of the patterns I do look for, which is an ascending triangle, right? And this is something that I'll look for 101.44 to break and hold in order for us to go long. All right, so AMD is on the list. All right, next one, Amazon. All right, back to daily levels. I only look at daily levels because that's what really gives you the right market direction. Sometimes, and I'll even look at weekly, but the whole point of it is to look at larger time frames, right? So here's the weekly. Here's the daily. We're making some sort of ascending triangle. We are getting into the golden pocket area for shorts. So even right here, we're rejecting the 0.618 fib level. So it's some caution here. So let me just go down to a lower time frame. Not bad. Right, we're starting to see this ascending triangle. Right, and we are constantly rejecting that 0.618 fib level, 144.26. So this is something I would like to look at coming up, after that gap up from earnings. We're having this whole consolidation period. So I don't think it's quite ready yet, especially with the NASDAQ so overextended. I think we're going to see some pullback and some more additional consolidation before we really make that push beyond 144.26. But it's something that I'm going to keep watch on, and I could just post it anyway, just so that we keep track of it during the week, right? So let me copy this. Amazon doesn't look ready with rejection of the 0.618 fib slash golden pocket area. We'll look at calls if we break and hold 144.26. Now let me just look a little bit closer to see if I see any kind of demand zones, which I actually do not, even on the 1 hour. Let me just go back 3 hour, maybe. Nope. See, there's a lot of gap ups too. 2 hour. No. All right. Let's move on. Next one is Boeing BA. So back to the daily. You can start to see a big trend that everything pretty much looks the same. And that's why I was saying that, I really like to look at ES and NQ to kind of see overall market direction. And at the very end of this video, we'll take a look back at ES to see how it's doing. All right, so ES, Boeing, at quick glance, just some consolidation and chop right above this daily 9 and 200. It may consolidate until we get a revalidation of the daily 9 before we push on up, but I don't think it's ready quite yet either. Blink is something that I actually have a large position in, and that's why I actually keep tracking it. I think we had quite a big move, and it's something that we capitalized in the Discord last week. The peak of it was actually 300% on that call out. So it was a very, very good play, but I don't think there's any clear winning setup right now. Coin. All right, coin is my #1 play right now. I'm actually already in it in the swing. It's already up 65%, and this sub really can't look any better. So, all right, what we have here is a daily bull flag, right? So let me just create a clean one. you can see it very clearly. We are we are seeing the daily EMAs diverge from one another, right? The daily 9 EMA right now is acting as support with a bull flag with a pull of about $60. So, the bottom of this is about 53 all the way up to 116, right? So something that I actually like to do, and this is what I just had on my previous chart, I go back to my default, is usually when you look at the length of a pole in a bull flag, that's for most part what you kind of want to target as your last profit target, right? So what I like to do is after I draw my pole from the bottom to the top of the flag, right? What I actually do is I duplicate it, and so I'm using Thinkorswim. So I duplicate this, and this is how I got this line, right? And all I did was move it over approximately to where my pole ends would be at close to 160, right? So that would be my long-term profit target. I don't really think it's gonna actually make that big of a pull. What's it? Almost $70 from right now. We're at 90 all the way to 160, like a $70 pull, but we can hope. But at least good profit target, a relatively conservative profit target would be our 116, 117 value. And not even that, we really want to target this daily 200 weighted moving average. So I think as long as this daily 9 holds, I'm going to keep holding. Again, like I said, my contract that I signaled on Friday is already up 65% at the peak. It pulled back a little bit at the end of the day, but I think as long as this daily 9 holds, we're going to see a breakout in the near future, right? So let me put this down. This is more of a swing opportunity, even though I'm already in it. But we can look at certain levels, like if we look at right here, where it got rejected twice, which is about 98. We can break that. We can probably see a good day trade or scalp as well. So before I go and put that down, let me look at some of the lower time frames to see if there's any supply and demand zones that I can spot out. Nothing so far, and I know I'm moving a little bit quick on these time frames, but something that I'm very accustomed to doing, so I'm usually pretty quick on spotting these supply and demand zones. All right, so we have a bit of supply up here. I actually am going to mark this as the 45-minute. What we have is a rally base drop, and this is quite an aggressive drop, right? So let me mark this. This is our 45-minute. Then I'm going to draw the actual area. All right. So what that means is, once we come up into this 95.82 area, I will probably take profit on my initial contract. I actually only have one runner right now, or one contract, so I don't have any runners to really keep holding for the final move all the way up out of this bull flag, right? Let me also draw this trend line that it may or may not respect. But this is a key level of 95.82. This is why I duplicate levels so much. I mean, not levels, but trend lines, right? I drew this one trend line to see what the channel really looks like. And you can see how it fits in so well, right? Once I duplicated it, you can see a touch here perfectly, and here almost perfectly. Let me get rid of this breakout. But this is a really good sub that I see as well. But it's something that, we already took. So it's just going to be on watch, but it's not really something that I'll be looking for a day trade. All right, Lucid. Lucid looks like a lot of chop. Moving on. Meta. Right here, we are actually in this golden pocket area where we rejected the last time, back in around July 21st, and we rejected it, well, almost rejected on August 11th, and so we might potentially reject it again, but I don't see that good of a setup other than, we might pull back and retest these daily levels down here. These trend lines were from a play that I had previously. But yeah, you can see that we're pretty overextended on the daily levels, the daily nines all the way down here back at 172. We're at 180, and uh this lavender colored EMA is actually the daily 50 EMA, because I have the daily 50 EMA as well as the daily 50 weighted moving average. I can get into another video if you'd like. Just comment below on what you want to see for if you guys want an explanation on how weighted moving averages work in comparison to simple and exponential moving averages. So yeah, Meta, I don't see too much of a play here. Let's go on to Netflix. Netflix, I've been looking at for quite a while now and we actually got a monster play last week off of the breakout on this ascending triangle, right? This level of top of the flag, 229.35. And I actually managed to hit the top of the 241.96. And so the reason why, and if you follow my Instagram, it's down, it'll be down the description below, but there was a 135% play on this for this breakout, and it was it was a good one. All right, so the reason why I've been looking at Netflix so much is that we had this giant gap down from earnings, 2 earnings ago, right? That we are just inching into this whole gap fill area now. That I really want to see if it actually go through with the gap fill, and that usually does happen. Gaps are almost always filled. I haven't really seen too many instances where gaps aren't filled, but I mean we are just inching in here and trying to really meet up with that 200 weighted moving average, right? So it's definitely on my watch list. If we can stay above these levels, they'll be pretty good. So I think that there's probably some demand zones to be found here. So let me take a look. This isn't too aggressive of a move down and up, but I guess if you want to count the small little gap up, you might count that as this red candle as a basing candle that forms a demand zone. And I think I will mark this just because where this demand zone is forming, right? We're forming right along that previous high where it got rejected at, the 241.96. So now that that level has broken, we have a supply resistance flip where it was previously supply and now, I mean, it's previously resistance and now we are at treating it as a support level, right? So let me mark this, and this is the 3 hour. Kind of want to see if there's some sort of supply. There's a little bit. Here's 45-minute. Let me look at the 30. Trying to look for like a clean one, but I do not see one. But I am going to mark this level as previous high. So this one, it's not too bad. What I want to see is a break above 251.62. So let me write that down. So I wrote that this is break of 251.62 for calls. This is the gap fill area. And if I just quickly go back to the daily, another thing I just want to double check is what the TTM squeeze and the stochastic, not the stochastic, but the normal RSI looks like. And you can see here that we are breaching the upper band of the RSI range, and so we're turning red, so it's very overbought. So I wouldn't be surprised if we pull back, right? We pull back and then we see a retest of the daily 9. So if we do pull back, to be honest, I would be looking at that previous support that we had that was resistance, the 241.96 as a break for puts, so that we can target that daily 9. And I think, to be honest, I would be leaning more towards the put side than the call side, because we've had we've had such a massive move, right? But that doesn't mean that we can go even further up. So it's all about price action throughout the day, what we see the indexes are looking like, and that's how we'll gauge interest as to if we're on the put side or the call side. But Netflix, I'm going to keep. Roku. Roku doesn't look good. It's too much chop, and these small candles are a sign of that. Shopify. It's quite a bit of chop too. There was small gap fill that it did fill, and then rejected, came back down. We're above the daily 9 right now, at least. It is an interesting area though, because we have, these candles are all respecting the daily 9, that 1, 2, 3, and we see the buyer's wick 1, 2, 3. Even though we do have this large seller's wick, but it's something that I'll keep an eye on. But there's still no real clear setup on this one. A lot of it still depends on what the indexes are looking like as well. Skills. It was something that I actually noticed, and it's more of a meme name, but it's not something that's, you know, I would say that's not something that's really high on my watch list, but it's interesting because of the EMA crossings right here. But it's not too bad. We can probably There's a potential that it can go up to the 200 with some time. It really looks like it's bottoming out here, so we'll take a look at that. But I will keep it on my watch list. Just not evident, just no evident play yet. Snap. We are in a gap fill area. I actually did not realize that. Haven't marked it too much, but let me get rid of this fib level. This is actually a play I had called out and watched this about 2 weeks ago, and and it really did a lot of work. So let me mark some of these key levels here. We have this lower low down here. right? That's where it looks like it's rejecting it. But outside of that, we have this large gap fill. So next one, this 11.88 and 12.66. So if we break and hold 11.88, I'll be going long to 12.66. Yeah, this one's not too bad because it's not overextended. You can see that the TTM is curling up as well as RSI, right? We're still at 49 level on the RSI, so there's still room to upside. So this one I actually will watch for a day trade. The reason why I'd say day trade and not swing just yet is because we are a little bit overextended off of the daily 9. Usually my swing entries, I'm anticipating a move and I'm not chasing a breakout on a move, if that makes sense, right? So for instance, if I were to get into a swing, this bull flag area, if I went down to a lower time frame, right, I would want to get a swing at the bottom trend line or right before a breakout, as opposed to finding a breakout and a hold to move up further. Because you lose a lot of the IV and the percent gain from the breakout, that the premium that that's gained from the actual breakout is quite a bit. So that's why with swings, because you have so much time on it and theta doesn't decay it as much, especially the kind of contracts that I look at, I'm able to hold it for a little bit longer, even if it does go red a bit. And that's how you get much higher percent returns on your swing plays, right? Opposed to day trades where you're looking for breakout and then um, you're looking for that impulse move all within the same day. So this one, that's why I think that this is a better day trade play than a swing play. So if I go back to daily, I'm just going to mark this snap in a gap fill area, needs to break and hold 11.88, targeting 12.66. All right, SOFI. SOFI is actually not looking too bad. It's creating some sort of falling wedge or bull flag, right? 4 hour, we have this demand zone right here. Even though it got tested already. You guys see this is a really good consolidation area, and maybe sometime this week it will break out. So really, this old put level, which did work out, and this was something that I was on the put side last week that played out pretty nicely as well. Now I'm going to look at the same level to be on the call side. Yeah, I think either Monday or Tuesday, if we can get above that 7.82 level, we can see a push higher. I actually don't have any Fibonacci's on this chart, but let me see what the retracement looks like. not too much. So I think what I'm going to do here is I'm going to take this point, this low point to the top. And that will be my Fibonacci. See, it kind of respects it pretty well right here. This 0.236 level, right? It's every single time I apply Fibonacci, it's really feels like magic. I don't know how, it's just nature. All right, so what I'm going to be looking at is a break of 7.82 for calls or a hold of 7.59. If it breaks 7.59, which is the 0.382 fib level, I'll look for puts. Right? So, yeah, I mean, that's how Fibonacci works and levels in general. If we hold one level, we'll look to move to the next level on that same side, right? So if 7.59 holds, we'll look at 7.95, and then we'll see how 7.95 reacts, then 8.52. If 7.959 fails to hold and it'll break and retest it, then we're going to look at 7.31 as the next one. You can even see it here just in this one candle, right? It tried to push up higher. There was probably an EMA, but it's below that 7.59 level. And then it tested that 7.31 level before, uh, you know, going back up to above the 7.59 level. All right. Tan. This is the solar power index that I look at time to time. It doesn't look that great. XLE. I do like looking at energy. It's not. It's really in this giant bear flag, up and down, up and down. Um, there's no real play to be had. I really look for really, really clean setups before I enter into plays, and this is not one of them yet. Zoom, we caught this breakout to the upside. It's really consolidating a lot still, but we are holding this trend line. You can see right here. Right, so let's just make sure it holds that trend line. I'll probably keep this on my watch list though, because if we do break down, then we'll see a final target of 96.11, because it does seem like a bit of a bear flag. But we'll see how this channel behaves. All right. So far we have SOFI, Snap, Netflix, AMZN, and AMD. They're not all that A plus worthy, but it's something to look out for. That's the thing with the way I trade and for swings, right? I'm looking for very clean setups that can yield me, 100% plus. And that's how I've been able to grow my account up for over 400% in these past 2 months. Just being patient and looking for clean setups. Right, so let me just take a quick look at some other tickers that I typically look at just to see if there's anything else. NVIDIA, I already looked at AMD, so I'm not going to look at that too much, but I have this other watch list where I look at, have a lot more tickers, so just quickly just going through all of them or some of them. Airbnb. I'm just trying to look for something that has a very, very high quality setup, right? A firm, Costco, CRM, it's right at the 200, but it is a bit of chop. Hmm. Something that I'll probably look to add to my watch list just to keep an eye on it. It doesn't look too bad. Crowd, Disney, Etsy. You can see a lot of these stickers. They all look fairly the same, where either the 9 and 200 just cross or they're about to cross, but they are quite extended relatively. Google, that's one to note. Right, we broke through this resistance, which is now going to be treated as support. I think I really will keep an eye on this. I want to make sure that, right, the 119.65 level that was resistance, that's now support, or 117.86 holds, which coincides with the daily 200. Right, the TTM shows that it released, um, but this volume has been decreasing, so I'm not too big of a fan of that, but I want to see if this 117.86 holds. But let me just look at some of these lower time frames to see if there's any demand zones. There is not, but there's even like a gap up. So I'm gonna put that as a area of interest. All right. Now, now I have something to look at. Google, right under the daily 200, there's a small gap up. There's a small gap below that might get filled. We'll look for calls at the daily 9 or break and hold of daily 200. Right, so let me post this one. All right. I'm not going to go through too much more because I typically only want to look at a handful of stocks. At the maximum is really about like eight stocks that I want to keep track of. Because then the more that you have, the more confusing it'll get, and you'll miss plays if you're not focused on your setups, and if you have too many setups, right? So sometimes too many is bad. Oh, Qualcomm actually looks decent, right? We have this giant bull flag right here. Alright, this is probably going to be the last one because I don't want to have too many tickers to look at. Daily 4 hour. Three, two, right here. It's going to be an area of supply. Looks like I have two sets of Fibonacci levels here, so let me see what was what. Okay. Let's see here that this Fibonacci level, when we bounced, or when we got rejected, it was actually off the 50% Fibonacci level from the all-time high to the most recent bottom, right? And then I drew a Fibonacci from the most recent bottom to the top. So that's the shorts. So I'm actually going to get rid of this this set and just keep the larger one. Now I'm going to take the most recent lower high, which is their 151.64 for calls. So this doesn't look too bad. You know, we held a daily 9. We might pull back a little bit or consolidate, but it's gonna be something to keep an eye out for. All right, so let me put this down. QCOM, daily bull flag and above the daily 200. Rico 151.64 for calls, but be careful of the 2 hour supply at 153.17. So you know this could be something that we look at for a scalp. We can we can get a swing contract or something, maybe like a 170 call with some time on it, right? But that's we'll probably need to see some sort of revalidation of some of these lower levels before getting into a swing call. But if you're in the channel, just you know, I'll be posting any swings I enter, so just be on the lookout for that. I think that is it for today. I don't want to put too many tickers on the watch list, but at least we have quite a few to look at, right? So we have AMD, Amazon, Netflix, Snap, SOFI, Google, and Qualcomm. All right, guys, that's it for the weekly watch list. I'll try to make a update video next week to see if any of these plays played out. If they did or did not, I'll still post one. And just like, comment, and subscribe down below. And I'll talk to you guys next time. See ya.